Here is the strategy aims to ride the long-term uptrend of the Nasdaq 100 via TQQQ, which is something that is a triple leverage Nasdaq. If you take a look at how well TQQQ has done, you'll see why it's one of my favorites to trade. Look at TQQQ. Look at how well this thing's done over the years. If you go max, this is in Google Finance. Since 2010, when it came out in February 2010, it is up 23,000%. That is pretty damn crazy. So whatever money you put in times 233, right? So let's say if I put in 10,000 bucks, that'd be $10,000 times 233. We would end up with a very, very nice result there. So 233 times $10,000. Let's say if I put in 10 grand into this ETF, I would have $2.3 million right now. Pretty damn crazy. All right, so turning 10K into $2.3 million since 2010. That is pretty damn impressive. It's why I really like this ETF. Again, basically, it's the NASDAQ, it's the QQQ times 3. So if the QQQ is up 1%, this thing's up 3. If the QQQ is down 1%, this thing's down 3. Right, so it's one of my favorites to actually trade. However, it is one of those that crashes pretty damn often. So you can see here, it reached a peak of $42 in 2021. And then we had the bear market of 2022, and it dropped all the way down to like $8, $9, right? So this thing moves a lot. That's like a 75% drop. That's pretty damn crazy. It's not something that I would want to put all of my money into, but if we were to trade this thing, we actually have one of our strategies trades this thing based on the 200-day moving average. You actually can get rid of a lot of these big drops, and you end up having a much more smooth transition upwards, which is kind of what this strategy does. But we actually took this one and we added a little kicker to it, where if it's below the 200-day moving average, it's actually going to buy put options as well, right? So we're saying here, TQQQ price must be above the 200-day moving average to hold the position, right? And then the hedge uses QQQ puts with expirations around 6 to 12 months and strikes from at the money to about 15% out of the money. Okay, and let's see, we could see the rest of the description here. Right? If in trend, the strategy targets up to a 90% account in TQQQ. If not in trend, it targets 0% in TQQQ. Okay, and then the hedge targets about 7% of the account using QQQ put options with expiration 6 to 12 months out and strikes from the near current price to about 15% below it. Option trades are skipped when pricing looks poor. For example, spreads are too wide, right? Risk management. So basically, it's buying TQQQ only if we're above the 200-day moving average. And then we're also owning these put options in the meantime so that if something falls, we actually even make money off of it, right? So pretty damn cool. So this is a strategy that we started working on about 2 weeks ago. You can actually see a flow diagram of it here, if that helps, right? Is TQQQ trend data available? Yes. Is the TQQQ above the 200-day moving average? If yes, then target 90% allocation to TQQQ. If no, then it's 0%, right? Either way, adjust the TQQ position if we need to, then check and adjust QQQ put hedge, right? So it's basically doing this no matter what. We're always owning these put options, and then update counters and logs. And if I wanted to, I could actually even ask. So you can see here that it automatically started a back test for me. Let's see how that back test is going. There you go. It failed for some reason. We're going to use the AI to fix why it failed. There's some sort of failure. There's a big button there. We can click on fix using AI. So we're going to see what is going on with that one. So what do you think about that? Put it into the comments. Let me know. I respond to all of your comments. So I'm very interested to hear what you thought about the video and what do you want to see next. And of course, if you're interested in any of this stuff, go check it out at botspot.trade.